to this week's webinar. We have a special guest for you today, Connor King with Willamette Valley Bank. Connor, how's it going?
It's going good. How are you doing?
I'm doing well. Yeah, shifting market in real estate makes for some great conversations, and sounds like the world of mortgages is kind of having the same issue here.
Yeah, things are always changing in the line of mortgage. I've been doing mortgages for 7 years now, going on 7 years, and so I've seen the ups and downs, and these have been some of the more volatile times that I've personally seen, and it certainly keeps us on our toes, and we kind of just have to adjust day by day to see how we can help our borrowers and how we can help everybody move forward in today's market.
Yeah, awesome. And it's great to hear your experience as well. The 7 years going through other shifting markets, just being able to have that experience and knowledge that is very valuable in a transaction. And so today, our webinar, it's going to be pretty straightforward. We'll get into this a little later, but Connor, you have a loan program to present to our buyers. And in this market, it's super valuable to buyers. But before we get into that, I'm going to talk about kind of the current real estate market, looking at the past 6 months, what's going on. And then if you would be so kind to talk about the world of mortgage and loans, the past 6 months, look at that. And then we'll see what you guys have for a solution for our buyers here. So looking at real estate past 6 months, we've obviously seen a large shift in what's going on. We've seen houses appreciate astronomically over the past 2 years since the COVID pandemic. And although home prices are still appreciating, the acceleration that it's doing that is declining. And we're starting to see more homes sit on the market a little longer. Our buyer pool has diminished a little bit due to rising interest rates, people not being able to afford homes currently, but also it's just the time of year as well. We are through the summer selling season. So going back to school, all of that, we're starting to see a little bit of a slowdown. That doesn't mean it's not a good time to buy or sell. It just means that the market conditions are changing. So I have some statistics here for Clark County, Washington. Our inventory is still historically low. We're at only 2.3 months of inventory, and that means we're still based on inventory in a seller's market. Buyers are starting to get some negotiating power back in the transaction because homes are starting to sit on the market a little longer. There is some uncertainty in the market for sellers and buyers alike, so everyone's trying to navigate that. So that's kind of what's been going on the past 6 months. I definitely have noticed it more in the past month or two, that people are starting to get a little more fearful around the market. And really, there's no reason to fear. It's just time to start looking at statistics, start looking at a long-term vision. It's not necessarily the time just to buy or sell just on a whim. So Connor, in the past 6 months in your world, what's been going on?
I mean, in the last 6 months, we've seen a pretty steady incline in interest rates. Unfortunately, the Fed is trying to fight inflation, and they're trying to do that by raising the federal funds rate, which is in turn raising interest rates for consumers. And even just last week, the Fed spoke, reiterating that they're going to continue to hike rates throughout the end of the year. And even this week, we've seen rates kind of go up a little bit because of that.
Yeah, so with those rates rising, I definitely see the translation into our real estate market as rates have been continuing to rise, with home prices still holding fairly steady in our area because of supply and demand. Homes have become less affordable, especially for entry-level buyers, but across the board as well. Interest rates play a big factor into people's monthly payments, in the total payment of a home. Although typically, how long do people hold on to a particular loan before refinancing, anything like that? Do you have that statistic?
This isn't exact, but I want to say it's every 3 to 5 years, people either refinance or sell their home or have some life event go on that they have to end up adjusting their financing.
So looking at today's rate, that might not necessarily be the rate or payment they have for the life of their loan. It's just their starting point, is what I'm hearing.
Exactly. Everyone's hoping rates are going to go down in the future once inflation kind of levels out. And then when that does happen, if that does happen, then we can look at refinancing to lower payments from interest rate, get rid of mortgage insurance. There's a lot of ways that we can drop those monthly payments, even though they seem high right now.
Yeah, so I think a lot of people, especially buyers, they see interest rates go up. They think, oh, these lenders are trying to just make more money off of it. I know it's not necessarily in your hands, but it sounds like you guys are starting to roll out programs that are actually helping these buyers adjust to what's going on. So I'm going to bring up this flyer you sent me, and if you wouldn't mind just talking about the program you have here, we would all greatly appreciate it. So just
Is it up? Oh, there we go. Yeah, so this is our 2-1 buy down program, which is helping people kind of adjust to entering the real estate market. It kind of helps them ease into their monthly payment, and it's a way to kind of fight the rising interest rates. So essentially, what it is for the first 12 months, first year of payments, it's 2% lower than the par interest rate. So if your par interest rate is 5.375 for the first year, you're paying 3.375, which on essentially $600,000 loan is $700 a month difference in payment, which I don't know about you, but I could find a lot of ways to spend $700 every month rather than paying that in interest. And then for the second year, or month 13 through 24, the interest rate is 4.375, which is dropping your payment $363 a month, which is another huge savings. And with this program, if the stars align and rates drop in a year, we could refinance at any time. So you might not even ever have to pay that 5.375. We might be able to lock you in at 4.5 and keep your payment lower. And so you're never actually hit with that high mortgage payment at the 5.375.
so how does the buyer get this program through the transaction? Is it just a program that's offered, or do they have to get some sort of credit?
Yeah, so the way it works is now that houses are sitting on the market a little longer, sellers are willing to concede a little bit and pay some closing costs. So the way it works is you have to get a seller credit for a little over 2% of your loan amount, and that will cover the program and essentially buys the interest down for those first 2 years.
Great. And then if rates do continue to rise, is that final rate adjustable, or is that a fixed rate for the life of the loan?
Yep. And so if rates continue to rise, then you're still locked in at an awesome rate of 5.375. And at that point, you feel like you're sitting pretty because you're not paying 6.5, potentially 7% wherever the rates do end up going. You're locked in for the remaining 28 years at that 5.375 if you never refinance.
Got it. It seems like a fairly simple program, but I'm not seeing this out around or really promoted a ton. Are you guys one of the only ones in the area that's running a program like this?
I personally haven't seen any other mortgage companies really promoting anything like this. This is something some of our big wigs rolled out just because everyone's interest rate conscious, and we felt that it was something that would help the clients out the most and put them in the best position and potentially save them money in the long run, which is kind of the goal for everybody.
Yeah, and obviously it seems everyone's position or situation is different when buying a home. Is the buyer able to buy down that interest rate, or buy down that credit, or buy down that interest rate, or is it only a seller credit?
So for the 2-1 buy down, only the seller can contribute to getting the 2-1 buy down program. The seller or the buyer can still come in and buy down the rate to make it a 5.25, anything like that. But for the actual 2-1 buy down, that has to be seller paid.
Great. So partnering with real estate agents that know about the program is definitely beneficial for the buyers then to be able to negotiate that into the deal as well. So Connor, I'm going to scroll down here, but how can buyers reach you to ask questions about this program, or what's the best way to contact you?
I'm pretty available. My cell phone number is on there. I'm always open to text or phone calls. And then my email is on there as well. If you just want to shoot me an email with some questions, I like to be as available as possible for clients. And answering questions is the easy part of my job. So I'm always here.
Great. Well, thanks for sharing on that program. Let's just kind of have a closing discussion here, but kind of obviously no one can predict the future, but with this buy down program, it sounds like it's a great opportunity for people to get into the market now. Really low risk if rates continue to rise because you're locked in. But if rates go down, you have the ability to finance after, how long is it? 6 months to a year, where they can refinance if rates drop.
We could refinance after 6 months. And actually the difference of the seller credit that you would have received would be added to a principal reduction. So it would kind of offset that refinance because you're going to have $5,000-$10,000 getting tossed onto the principal and kind of canceling out any fees or title fees, anything like that associated with the refinance.
Yeah. Well, great. It sounds like an awesome program. I definitely have been promoting it to some of my current buyers, and I would recommend at least looking at it, see what it does for your situation. Not all sellers are necessarily going to agree to a 2.25% buy down, and some will, and they'll still fit within the appraisal, all of that. So I think it's a great program. Really love what you guys are doing over there, and appreciate your time today to talk about this program. Hoping we can help some of our buyers get into it, save some money in their monthly payments for the first 2 years.
For sure. Yeah, I appreciate you having me. And again, I'm always here to answer questions and help out the community when it comes to their home financing needs.
Yeah. All right. Thank you. Thank you, everyone, for watching this week's webinar. If you have any questions, like always, feel free to reach out.